Hello, folks. It's Thursday, September 12th. It's about 7 o'clock in the evening on the west coast of the United States. In this video, we'll be looking at the gold charts. Gold made a big move today, and it's continuing this evening. So let me share my screen here, and we'll get going. Here's gold in the daily time frame. We looked at this chart earlier today, but we didn't see this action. This is the overnight session, obviously. So today we got a price increase of $47.30. That is a big move, almost 2%. Continuing tonight, we're up another, what's that, 470 or so. Got a price target at $2,600, which it's a round number, and coincidentally, it's at the top of this price channel. And as I pointed out in the earlier video today, price is quite overbought. If we look at the distance between the 50 and 200-day moving averages, that's a big gap there. The price action is very overbought based on the moving averages, but this is a bullish chart. MACD in bull mode, which suggests that the primary trend is to the upside. Excuse me, energy is very elevated based on stochastics. That's one of the ways that I measure energy. The other way is I look for signs of impulsive price action. And today's price bar candle is extremely impulsive in that, for one, there's two factors. It's wide ranging. This is a wide ranging bar. So it's a big bar, a tall bar, if you want to use that term. And then price closed very near the high of this bar. There's a little bitty wick. So the high was at 25.60 and the close was at 25.58. So, $2, actually, it's less than $2. So anyway, a close very near the high of the bar. That's one of the ways of measuring the impulsiveness or the energy level of a price move. So anyway, nice action in the daily chart. Here in the weekly time frame, this price action, we could talk about it being overbought, but there's another way we can look at this action. This price movement is too steep to be sustainable. It's right on the edge. Typically I think of like 45 degrees, that anything steeper than 45 degrees is really not sustainable for any length of time. And this movement, it's right in there, it's 45, maybe it's a little bit. Anyway, this is a steep price movement, which I would suggest, I would suggest that it means we need some, whether it's a pullback or some sideways consolidation. Based on this weekly time frame, I'd be looking for, maybe we poke up to 2,600. We get to this price target at 2,600, and then we either get a pullback or, like I said, some sideways consolidation. Again, based on the moving averages, price is very overbought. What else we got going on here? Let's look at the indicators. High energy based on stochastics. And here we can see there's, based on MACD, price is very overbought. As I point out regularly, MACD is not a bounded indicator. It can go to infinity in either direction. As Buzz Lightyear would say, to infinity and beyond. But typically, or quite often, previous highs and lows in MACD act as basically boundaries or bumpers. When MACD reaches a prior high, price oftentimes will hesitate or reverse at that level. And so anyway, based on MACD, very overbought, albeit in bull mode and on a buy signal. So that suggests that the primary trend is to the upside, which, we can see that simply by looking at the price action. Let's keep rolling. We're in the monthly time frame now. This is a flag pattern, which I've pointed out before. And so basically we've got a flag that's this line, this price movement. And again, very steep price movement there. And this is an excellent example of, we get a big steep price movement and then a sideways consolidation. Price needs to digest this price movement. The gain, we went from, what's that, $1,200 or $1,150 all the way up to 2071. What's that, $900? So, gold gained $900 in, what is that, year and a half, roughly. And so, big price movement in a relatively short period of time. And again, we're in the monthly time frame. We need to digest that price movement. In the terminology of a flag and flag pattern, so this is the flagpole. The sideways consolidation is the flag or the pennant. Some of you refer to this as a pennant pattern as well, it's consolidation. And the measuring rule, when we're looking for a price target based on a particular pattern, we talk about the measuring rule. And so with the flag pattern, the rule of thumb is that the flag flies at half mast. And what that means is we take the flagpole, we copy the line, we paste it, and then we move it up to the low of the this movement in this case, to get our price target, which gives us a price target here at 25.50. Well, we're already there. And so this is, excuse me, this is another indicator or suggestive that this price movement needs some rest. It needs a consolidation or a little bit of a pullback. Anyway, let's see what the indicators are doing. MACD, see again here, we're very overbought based on this prior. Yeah, too funny. I'm pointing at my screen again, which you can't see. Based on this prior high in MACD, we're at a very overbought level again. Whether we look at price or we look at MACD, very overbought. But notice that MACD is poking up above that level. And so perhaps price is moving into a new range, which would suggest that we could go back and look at, well, that doesn't make much difference. We're still we're still very overbought based on MACD, even on this prior peak in MACD, where, look at the price action. We get up to this level in MACD and price, consolidates sideways and then rolls off. So anyway, a couple of indicators that price is very overbought. We've hit this target. Energy is elevated. And of course, price can become more overbought. Just the fact that we're overbought today doesn't mean that we won't be overbought tomorrow or that we won't get more overbought tomorrow. And clearly, gold is on the move. And, a couple of things, if you're keeping track of geopolitical conditions in the world, things are heating up. We've got 3 different hotspots right now that any one of them could ignite. And so I don't want to go off on a tangent, talk about geopolitics, but anyway, it's a heated situation, let me put it that way. And then we've got expectation that interest rates will be cut on the 18th. The next FOMC meeting is on the 18th. That's next week. Expectation is that we'll get at least a quarter of a point cut and potentially half a point cut. I don't really expect that, but that's just me being contrarian, I guess, not headed. we've had a couple of reports, both CPI and I think PPI as well, have come in hot. That inflation is inflation is not under control by any means, and what we've seen, if you think back, when we came into 2024, widespread expectations that we would get 6 interest rate cuts in 2024. And here we are, it's almost the middle of September, and there have been, exactly 0 rate cuts so far. What's happened is that just before every FOMC meeting, there has been some reason for the Fed to not cut interest rates. Hot jobs report, concerns about the economy overheating, inflation is too high, etc. And so anyway, we've had two reports now that inflation is hot, and with the NVIDIA CEO coming out, what was it, yesterday or the day before yesterday, and sparked a big rally in the equity markets. So the AI bubble is back on. Yeah, anyway, big move in the equity markets. So anyway, my expectation is that we won't see an interest rate cut, but that's one of the reasons that gold is potentially moving higher right now, is expectations of interest rate cuts. Let's keep rolling here. This is a fun chart. This is gold in the monthly time frame, and notice that we're in the log scale because of this, because I'm predicting a potential price increase all the way up to almost $8,000. And so that's why I flipped to log scale, is to capture that big a prediction. So let's talk about this chart a little bit. This was the last big bull market in the precious metals. Basically started in the early 2000s and ran for 12 years. And that's what we see there, 12-year bull market. We got a 758% gain in the price of gold. Then we had a 4-year bear market, gold basically cut in half, 46%. If we take this 12 years, that's what I've done here, is like projecting another 12-year bull market. And we start from the bottom, the low. This was in late 2015, December of 2015. That was the end of the bear market. So we start there. That gives us our 12-year bull market, potential bull market. Remember, we're just spitballing here. We're throwing mud against the wall. It may or may not stick. But 12 years takes us out to December of 2027. And assuming that we have that if we were to see another gain of 758%, that's how I get to this number of 79.28. And so there you go. If you get excited about price predictions, there it is, 79.28. You heard it from me first. But again, I can't give financial advice. I don't give financial advice. I will share with you my personal experience. I started buying precious metals back here in, it was about 2002, about in there. Gold was in the 380, 375, somewhere in there. I can remember buying, gold popped up. What are we at there? 380. I can remember buying gold at 450 or so. So we were in, 2004. And so I'd been buying silver and gold for about 2 years at that point. I can remember buying gold at $450 and just, oh my God, I'm overpaying, It's like, let me hold my nose and just keep buying. And of course, 22 years later, it's been a while, 24 years later, no, 22 years later. Anyway, I'm just sharing with you my experience of buying gold at $450 and thinking that I was overpaying. And so here we are at $2,500, almost, well, $2,550. pushing up towards 2,600. Easy to think that, oh, oh my God, if I buy today, I'm overpaying for gold, and as soon as I buy, it's going to drop back down. Well, maybe, maybe not. That's not my expectation. Again, I think we're headed to much higher gold prices. And one of the things on the horizon, significant events, in my opinion, and it's not that far out on the horizon. It's the BRICS Summit number 16. It's in October 18, 19, somewhere in there, middle of October. It's in Kazan, Russia. Russia is the chair. In the BRICS organization, they rotate the chairmanship every year. And so this year, it's Russia is the chair. Vladimir Putin obviously is the chairman. Expectation that a number of countries will be joining. Potentially, they will announce a new currency, or at least, anyway, I expect that we'll be seeing some monetary news out of this summit, BRICS summit. So, and again, that's what, 5 weeks from now. 5 weeks from now, that's not a long time. But anyway, my expectation is that the BRICS organization, I don't really expect them to create or announce a gold-backed currency. No government or politician wants to commit themselves to a gold-backed currency or a gold standard of any sort. You think about it, when you have a fiat currency and a printing press, all you have to do is go down in the basement, and you hit the go button on the printer, and next thing you know, you got a stack of Benjamins or a stack of rubles if you're in Russia, or renminbi in China, anyway. And as soon as you go to a gold standard, well, you can't do that anymore. Well, you can't do it honestly. You can pretend. But anyway, so nobody, in my opinion, will by choice announce a gold-backed currency or tie themselves to a gold standard. But the fact that they're moving away from the US dollar pulls the rug out from under Western pricing of the precious metals and Western control of pricing of the precious metals. The Russians are basically creating all of the financial organizations that have been up to this point Western created, Western controlled. Same thing in China, the Shanghai Gold Exchange. And so anyway, with the movement towards BRICS, which it's the bulk of planet Earth, bulk of the population on planet Earth. I'm expecting big things from BRICS, and that will lead to significant price increases in the precious metals. The fact that they are going to take control of the pricing of not just gold and silver, but all of the commodities. Basically, the world is tired of Western control of the financial markets, and they are moving strongly and rapidly to change that situation. So anyway, enough of me babbling. We're almost at 20 minutes. Let's keep going here. Now we're in the quarterly time frame. So each price bar is 3 months. I referred to in the this morning's video, or it was probably this afternoon, but anyway, in the video earlier today, I talked about double the range. And so here's a good example. We draw a simple trend line, and again, I try to catch as many of the bottoms of the candles, and then I duplicate that line and I look for the top of the channel. And so that's what we see here, the middle line. That's the top of this price channel. And so notice, we're catching all of these highs with the top of the channel, and then we caught that high as well. As I'm sure you can see, price has poked up into the upper channel now. So anyway, we take the lower price range, we double that range to get a potential target. And this again, I learned this technique from Dr. Timothy Morge. He was my mentor for Andrews Pitchforks. And this gives us a price target at the top of this channel, potential price target, $3,600. And I believe, no, we were at 20, that was 26 here. But anyway, $3,600 as a potential price target here in the quarterly time frame. This is this comment here. This is confirmation of, if we go back to this chart, so end of the bear market in late 2015. Well, here's confirmation, or another confirmation of that idea that late 2015, that was the end of that four-year bear market. We see it here in stochastics. Price runs out of energy and trails along the very bottom of this stochastics indicator, and it is a bounded indicator. So essentially bumping along at zero for several years, and then it starts to rise. And so anyway, that's another indicator or a suggestive factor that was the end of the bear market, late 2015, and that price has been on a steady increase since then. MACD obviously in bull mode, which suggests that price trend, the primary trend, is to the upside. On a buy signal currently, I think that's it in that chart. We got one more chart. This is half-year bars. So each of these candles represents 6 months. And notice this is a cup and handle pattern. You can see there's the cup, there's the handle. The measuring, the way we measure price target, the measuring, I forget what terminology I used a minute ago. The way we find our price target from this particular pattern is, again, we measure from the top of the cup to the bottom of the cup, and then we duplicate that range. We throw it up above the top of the cup, and then that gets us our price target. And so in this case, this time frame, that gives us a target at $2,800. Now, if we look at from an Andrews pitchfork perspective, and in this case, this is a shift pitchfork, the next price target would be the next median line, which in this case is the first median line extension. And we go out, let's say that in the next 6 months, we reached that point. And again, it's $2,600 and change. And so there would be another, at $2,600, we might see some sideways consolidation, maybe a little bit of a pullback. And, as exciting as it is to see price going straight up, as I was pointing out earlier, this kind of movement is not typically sustainable. That this is just too steep a movement to be sustainable, albeit, and let me throw this out there as an idea for you to consider. If somebody were, if some organization or some country decided to create a new currency that included gold and other commodities as part of the backing for that currency, and I would suggest, if you go look, there's a white paper. If you do a Google search on unit, that's the name of this potential currency, unit and white paper. So do your search on unit white paper or white paper unit and read that. And what they're talking about is the potential for a basket of both commodities and currencies, and reasonable to expect that one of the commodities in that basket would be gold. That just makes sense. Gold's got a 2,600 years history of using gold as a currency. And, even longer, 6,000 years that human beings have been using gold for art. Um, you know, anyway, gold's a good thing. And we have a long history with gold as human beings. My point is, uh, when or if some organization makes a move towards gold, it's possible that they will choose a price for gold that's considerably higher than today's price. If you and I were sitting down at the kitchen table and we're saying, I'm looking at my timer there, and we were saying, it's like, okay, we're gonna build this basket and we're gonna throw gold in there, but you know, gold at $2,600, well, that's not really enough. Maybe we ought to put gold at $3,000 or $5,000 for starters, and that would give us the potential in price. When we were looking at price charts, that we would see stair step action, that we wouldn't see a geometric or a gradual progression from here up to 3,000 or up to 5,000, that it would just be we go to bed on Friday night and we wake up Monday morning and, bam, gold's at $5,000. And so that's just something to consider, that we might see stair stepping action in the precious metals. And silver will follow gold. Whatever gold does, silver is going to follow. Jim Sinclair talked about the potential for stair stepping action. And he even suggested, with the idea of gold-backed currency, that whatever organization comes out with the first gold-backed currency, they'll pick a price, and that price will work for a couple of years, and then they'll have to increase the price. And so Jim was suggesting that we could see, a series of price stair stepping higher. And of course, he had I'm not even going to say what price what he was predicting as a potential price target for gold, because it sounds ridiculous to even say it. So anyway, that's enough of me babbling on. Hopefully, I've provided some value and some fun price targets to think about. So you can think about going and buying the yacht with the money from your gold investment. So anyway, talk to you soon, folks.